The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Hello. How are you guys doing? Just bear with me. Should have the screen on, although my setup is a little bit raggedy today. I spent the past day and a half pulling apart my office, so that's why on a laptop I've got a couple of what are they called, soundproof things behind me. Not managed to finish putting those up yet. Anyway, how's everyone doing? I'm gonna have to keep switching back and forth. I apologize, it might be a bit annoying to watch. But anyway, hope everyone's well. Had some really nice moves in the market over the past day or two. We've had yen obviously falling off a cliff after we had the PM news over the weekend. And we've had some very nice dollar strength as we have a bit more risk on. And we've, of course, have the capital flow aspect where we have capital leaving yen flying into dollars as well. So I'm benefiting quite nicely. I've got a short on euro dollar here, so I'm about 230 pips in profit here. Nothing too crazy. I did have a slightly smaller take profit earlier. However, I decided to extend it given the strong momentum here. So I'm looking to continue building up some more short positions over the next couple of days, although that will heavily depend on what's in the FOMC. I just placed a long on pound New Zealand as well. I placed this one as I was waiting to come on stream. So this is a little bit of a aggressive entry. It's a bit more aggressive than I would normally go for. However, the technicals are quite nice. We've got a really nice level of, something just fell in. Really nice level of previous resistance turned it into support. So it's a very typical break and retest type of pattern here. We've obviously corrected the RBNZ rate decision candle. So the RBNZ cut rates by 50 basis points, which obviously caused a lot of New Zealand asset or a lot of New Zealand pairs to rocket to the upside. We've had the full correction now, or almost a full correction, and we've come into the fib zone showing a little bit of rejection. On top of that, we do have pound New Zealand right here with a very bullish reading of positive 10. So there's quite a nice little setup there. UJ to 171, possibly. Where's Nick? Nick will be here shortly for FOMC, so I'm just starting the show. I'll be here for maybe 25 minutes, half an hour, give or take. Then there's someone else, and then it's Nick. I'm not sure who's on after me, actually. I didn't check. Anyway, I do apologize again. It might look a little bit raggedy today on my side, just because I've only got one monitor today. So pound Swiss, I'm still in the long positions here. This is a really nice carry trade, so I'm pretty much just sitting, waiting really for this to do something. It's essentially just been sideways. It's been profit, drawdown, nothing really very interesting at all. However, we are at multi-year lows on pound Swiss, so it seems like a pretty nice position to be in, really, looking for basically the same reaction that we've had multiple times off the same level. And again, we are in a carry trade environment right now where we get paid to hold longs on pound Swiss because of the interest rate differential. Obviously, the Swiss National Bank is currently at 0, meaning pretty much you can trade the Swiss or trade anything against the Swiss, and you should be getting paid quite nicely. And my S&P 500 long. So this is all I'm in 4 positions. Well, they're all moving very nicely, actually. Obviously, pound New Zealand still to entry, but the S&P and euro dollar are really doing quite well. Dollar yen, actually, let me just see if you guys want me to cover anything specific. Chris Pulver is up next, and then Nick will be coming for FOMC. I get it, okay. NFP? No, it's not NFP today. Pound CAD, okay. So pound CAD's got a very bullish reading, so automatically I would lean to be a buyer. I was watching pound CAD by the looks of it. I completely forgot that I was paying attention to this market. So we've got a very, very nice trend to the upside on pound CAD. We've got the edge finder giving us a bullish reading. So that tells me to be a buyer. Now, the only problem is with this market is a couple of things. Well, two big problems, or two potentially big problems, let's say. We've obviously got the dollar that is doing very, very well at the minute. So when the dollar does well, we can sometimes expect the Canadian dollar to benefit as well. And oil, of course. So oil, I'm not really bullish on oil at all. I'm fairly sure we had actually some negative news for oil over the past day or two. I'm not 100% sure. I don't really trade oil. However, I think the upside for pound Canadian might be a bit limited. I think Canada's economy is in a very tricky spot. There's not really any positives, to be quite honest with you. But on the other hand, it's been like that for a little while now. So it's priced in, that it's not like anything is really going on with Canada that no one knows about. It's just a weak currency and a weak economy. The UK, you could argue that, yes, it's weak, so you would still want to sell it against stronger currencies. But the UK's got not the same problem, but it's kind of in a predicament itself with fiscal issues. There's also a lot of political instability, a lot of social problems as well in the UK. So I think it's a little bit of an unstable currency to be holding for a long period of time. So on the face value of things, I think pound CAD could be a good long. However, there's just a couple of things there that are making me a little bit more hesitant to be a buyer in this one. We're expecting an expansionary monetary policy. Inflation is up by jobs data. The thing is, I wouldn't expect really anything from today. If any, I think realistically, it's going to be case one. I would say it's going to be completely flat, neutral. I mean, obviously we've got the government shutdown, so what can they do? The only real piece of data we had really was ADP. And ADP was very bad, but I don't think that's enough to start moving on or speaking too heavily on monetary policy. The other case could be Powell is reiterating or could reiterate the idea that we're not going to have any more rate cuts, or at least aggressive rate cuts. And that would feed the dollar upside a little bit more. So we could start seeing 99.5 towards 100 come on the dollar if that's the case. Maybe even higher. It depends exactly what's said, of course. But yeah, I wouldn't expect... Yeah, obviously it could happen, but I wouldn't expect really that much of a dovish tone today. We say the same for EuroCAD. I don't think I've really got a bias in EuroCAD. Yeah, it's relatively flat on the edge finder. It does have a bullish reading of 5, but 5 for me it's not enough. 5 is still within sort of, it's too close to being neutral to pull my interest in. All it would take for these 5s to flip back to neutral is just one thing to change. Whereas when you're looking at something like the dollar CAD where you got 14, you've got a little bit of wiggle room there for it to stay in bullish territory. So EuroCAD, yeah, nothing there for me right now. These things are in my head, James. Thank you so much. Hearing you say what I'm thinking. That's good to hear. Great minds think alike, Papa. That sounded a bit weird. I'm not sure I want to call you that. Gold is facing a bubble. You know what? I was looking at gold and I was thinking about making a video on it, but I don't really have enough to back up gold. So the current thing, or the way I'm seeing gold right now, is technically it's extremely overbought. So on every time frame, I mean, even the H4 is looking a little bit overbought here. We've broken and smashed past 4,000. 4,000 has been a big, I mean, it's a big psychological level. It's the next 1,000. We had 3,000 at the start of the year. That was the big, oh wait, was it the start of this year or was it earlier last year? Anyway, 3,000 was the big talk of the town. Then, of course, it was 3,500, then 4,000. And we're just smashing past all of these levels. Eventually, we're going to see some profit taking. When that will be, I don't know. But again, weekly, very, very overbought, technically speaking. I mean, we've been holding above the Bollinger Band, which is quite rare. Keep in mind, the Bollinger Bands are generally used for either bounces off the 200 moving average or mean reversions. So when you would typically see a weekly time frame holding above a Bollinger like this, it might be a signal to start looking to either close longs or maybe even get short, depending on the way you look at it. However, that's not been the case for gold. It's been holding above since early 2024, so over a year. The monthly, I'm fairly sure, yeah, the monthly is massively, again, technically overbought. So when I'm saying this, it doesn't mean I'm going to sell gold. I think that'd be a ridiculous thing to do, especially right now. But it makes me very worried, to be honest, to be a buyer, because all it would take is a little bit of a down day. We see some profit taking that very quickly snowballs into more profit taking, and we could even see 3,700 again, maybe even lower. You know, I don't know. But yeah, it's tricky to be involved with gold right now. DXY is ripping this week. It is indeed. Hopefully you made some money. I'll let your take on scores being more solid if they're above the 5 threshold. Yeah, that's just a mental or personal filter that I made. There was a couple of times when I first got the Edge Finder, when I'd take a setup and it was like 5 or 6, and it would just flip back the next day. I was looking up, oh dear, okay. So yeah, that was the rule I set for myself. So Nasdaq, let me get rid of the Bollinger Band. Hold on. So yeah, Nasdaq is looking like a good buy as well. So I'm already in the S&P, so I'm probably not going to take the Nasdaq, but I do like to keep an eye on it, especially with the very bullish score that it's got of 12. So I think really it comes down to just waiting for a pullback. I don't think there's really much we can do with this. It's a very aggressive trend. So it might be a case really of sort of maybe adding in small positions as we see a pullback. But then again, similar to what we spoke about on gold, are these markets becoming overbought? I would say yes and no. I think technically yes, fundamentally no. So we are coming into a nice bullish period for the indices markets. We'll just use the S&P because I'm already in this one. So we can see here the rest of the year, in theory, based on historical price action or historical trends, it should continue higher. So of course I'm not looking to sell, but would I be willing to start buying near these highs? Probably not. Although, you know, I think it could go higher, and that's kind of the predicament I'm in right now with gold, silver, Nasdaq, even the Dow as well. So I've been in and out of silver over the past couple of weeks. Well, maybe the past 2 weeks, sort of buying these lows and trying to take some profits. I've done quite well on silver, but I just cannot justify holding larger positions, especially as a swing trade. Gold to 4,090, dangerous to sell. Yeah, I absolutely would never sell gold here. I think being a seller of gold has just been a loser's game. This whole, how long has it been actually? Let me just check, because I was looking at this earlier today. I've forgotten what it was. So yeah, basically since COVID, selling gold is just loss after loss. I think really you might have made money here. So just after the Russia-Ukraine war, when we saw gold settle down, that might have been really the only opportunity for serious bears. And when I say serious, I mean longer term sellers to really make any money. I think it's just, yeah, I mean, you know, it's the same thing. If we were looking at gold here back when it was here, I could be saying the same things. Like gold is a bit too overvalued. You know, we could see profit taking. We have profit taking here, and then it continues to rally again. So yeah, it's like it's a fool's game really to try and time gold. I think it's easier to just continue buying, but obviously in reasonable prices. So on the next H4 pullback. 10,000 within 2 years and 130,000 by 2037. Look at the macro. Yeah, I mean, to be honest, I'm more bullish on silver. I think silver could go up towards 100 to 200. I don't have a time horizon. I've got no idea when. I mean, obviously it's all well and good saying that, but I would expect it to be a lot quicker than what people might imagine. I mean, it's already at 50 pretty much. So it's halfway there. So all I'm really doing with the precious metals, specifically silver, because don't forget, silver is an industrial metal, not just a precious metal like gold. And I did see a theory the other day, and I can't remember where I saw it, but it was an idea that silver might actually run out of supply, or they might run out of a silver supply due to its industrial part with AI and all the other things going on. So as AI increases and these companies continue to expand and need silver, obviously that supply will eventually start running out. So anyway, I think, yeah, buying silver on any reasonable pullback is actually quite a good idea. Not financial advice, as always. But yeah, so that's that. What about crude oil? I don't think there is anything for crude oil, is there? No, there's nothing on the Edge Finder. And in terms of the technicals, let's see. Just bear with me. Where's it gone? There it is. So we were looking at this. When was it? It was, I think it may be last week. Let me just have my moving average back. EMA? I can't remember what it was called on here. There we go. Moving average. And we need a 200. Yeah, so it seems every time we have a spike on oil, it just completely falls back. So we had a really nice spike here. There was a lot of people buying oil at this point, and then it just essentially collapsed. Same thing here, and then collapse. And the same thing here. Every time we have these rises in oil, it just can't seem to sustain any higher prices, which makes me really just lean on the side of just selling, really. So if we end up breaking higher and doing this, obviously I'd be looking to be a seller at these points here, with maybe a hard stop just above these highs here. But fundamentally, I've got absolutely nothing for oil, unfortunately. It's not really it's not really a commodity that I trade. It's not something I watch really too heavily at all. So I can't give you much value on that one. I apologize. When is FOMC? It's in 43 minutes. Nick will be back for FOMC, so don't worry, I'm not here for much longer. I know you guys come here for Nick. How much does FOMC meeting usually, how much does it usually last? It's not a live meeting. It's not going to be like the press conferences we get. It's just a statement, as in like it's a written statement. So don't get overly excited about Powell's tie color and all of those things, because you're not going to see it. So yeah, I don't know really. I wouldn't expect anything interesting. Again, my base case is absolutely nothing. That's just what I expect. But it wouldn't surprise me if we see something slightly hawkish. And you know, I'm basing that really around the idea that we've already had a 25 basis point cut. We then had the statement that sounded quite dovish. Then Powell came out for the press conference, basically just said it was a risk management cut, and it was quite a neutral to hawkish cut. Then we had the speech where he didn't touch on rate cuts at all, as far as I remember, which again is quite hawkish. So that leads us here. And again, we've not had really any data to support a rate cut since then, other than ADP. And again, I don't think ADP is enough to warrant Powell to start being heavy on the rate cut talks. You come here for me. I appreciate that. Can you please check oil? We did just check oil, Venom. If you rewind the stream a couple of minutes, you'll see. Silver, I have 100 of them, 330. What do you mean by that, Mark? Don't sell silver? That's the thing. If I had physical silver, obviously I wouldn't be selling it. But when it comes to CFD trading or active trading, it's a little bit more tricky, because obviously you've got to stick to some rules in the portfolio. But yeah, I think it's a pretty brain dead trade, to be quite honest with you. I'm saying that from a position trading aspect, not like a intraday or scalping. So first idea is silver comes back down to 44. That would be beautiful. That would likely come and meet towards the 200. That would be my sort of first major or more serious buy opportunity. If we keep dipping, I'll keep adding in. Silver is one of those things. As long as I can get a longer term pullback or a more deep pullback, then I'll be happy. But you know, buying here and then looking for it to go all the way up to 100 without having a pullback, I think it's a little bit overzealous. Maybe that's the right word. But yeah. Linda, Linda? Anyway, we've done oil again. If you rewind it a couple of minutes, you'll see the oil coverage. Bitcoin. So I was talking to a friend of mine about Bitcoin actually. Okay, I've still got some time. I was talking to a friend of mine about Bitcoin, maybe yesterday. Now, I think you could reasonably be a buyer, but I'm just cautious again with that dollar strength, and obviously I'd be trading it against the dollar. But with the dollar strength we're getting, I'm not sure I really want to hold any dollar shorts just yet. I might consider it if we can get the dollar to maybe come and create a double top here. Then maybe I could look to hedge out some of my euro dollar shorts by going long Bitcoin. But yeah, I mean, from a technical view here, this looks pretty good to be a buyer potentially. Trend is bullish. We've got 200 below price, created a higher low. But for me personally, it's not enough really. We didn't come down to the 50% retracement. We didn't come down to the 618. We haven't retested the moving average. And this pullback just isn't deep enough to warrant me being a buyer. But yeah, I think it's a mixed bag. It really isn't something I would be looking to be involved with, to be perfectly honest with you. What's happening with France? I think they had another government thing. I can't remember. I saw the headline, but I can't remember what it was, to be perfectly honest with you. France's government or political situation is quite baffling, to be honest with you, for lack of better terms. What do you think the statement will be from the Fed at the end of the month? It really depends. I'm finding it very difficult to really come up with a good idea. And I think a lot of people are in the same boat because we've not had the data. So for example, when we're looking, and this is obvious, I'm going to sort of nutshell this, if that's the right word, but this is the process when you're looking to forecast the central bank. You would first take what they said in the previous decision, which we already know. We said Powell cut 25, or Fed cut 25 basis points. Powell said it was a risk management cut. Okay, great. So it's a risk management cut to deal with the labor market. Inflation is elevated, but it's not a huge concern, or not a big enough concern for them to hold rates. So what do we do then? Well, inflation, we need to obviously keep an eye on to make sure it's not running higher. But then the main thing, obviously, as I said, it was a risk management cut for the labor market. We've not had any data to indicate that. So what we would normally do is go over to NFP and we'd look at what the data was. And if it was higher, okay, very likely we're going to have a bit more hawkish tone from Powell because there's not really a need to cut rates further if he's already done the risk management cut. And now the labor market's strengthening a little bit. The only thing, again, we've got is ADP, but I don't think that's enough to warrant him coming out dovish. So that's the thing. We're missing a lot of key data that we really need to start building a bit more of a solid forecast. So what can we do? Tell you what we can do. We can go to the casino, put some money on black. Phantom, hello. What did we miss? Not too much, just going over some markets, having a little chat about the Fed, pound Aussie. FOMC today, it is today, yes. What's the cause of gold and US dollar going up at the same time? Ilias, they're not correlated in the way that you would expect them to be in terms of like euro dollar. So I've not forgotten about pound Aussie, by the way. I will go over that one for you. With gold, it's not a currency, is it? So it's not a case of capital flows are going into dollars. So we generally will see them leaving the euro. Gold has its own reasons for moving, such as risk sentiment. So if there's anything going on in the markets that investors aren't happy about, they can buy gold, and they might also then take more aggressive trades on the dollar. The dollar can also be used as risk on and risk off. So it really depends on the situation. So it's not that one-to-one thing where you see, again, like dollar goes up, euro goes down. It's not the same. I've got 6 minutes left, so I'll go over some more charts. But I would Google that because it is something you should know. Grown-ass kid, hello. Your thoughts are always insightful. I appreciate that, Johan. Late live. Yes, Nick's doing FOMC today, so we started the stream a little bit later than normal. So pound Aussie, let me just check the Edge Finder. By the way, I suppose now is a good time to plug. You can get a discount on the Edge Finder. If you've not got it already, I would highly suggest it. You can use code ELITE. It does help me out. I get a little kickback from it, just to be perfectly upfront, but it helps you out as well. So it's a win-win for us both. And then we can be friends. So pound Aussie, I'm not seeing anything on the Edge Finder, actually. No, so there's nothing on the Edge Finder. So what I would then think about with this is, I'm actually not sure what's going on with the RBA at this moment in time, but the market's bearish. So I would suggest, just without looking at the data and things, that this market does obviously have a bearish tone from the fundamentals, and clearly the technicals are bearish as well. So I would then just be looking for potential shorts off these highs. If we could see a pullback here, stop loss above the highs and the 200, and then maybe just go for a 1 to 2 or something. But again, I'm not seeing anything on the Edge Finder, and I don't really have any idea what's going on with the Aussie right now. So that tells me that there isn't really much of a reason to be in the market, again, for me anyway. Also, shout out to the A1 guys, whoever made the Halloween edit. It looks good. So now is dollar risk off? No, I don't think there really is much of a risk off sentiment in the markets right now. I mean, the yen's down, dollar's up. Yes, gold's flying, but yeah, I wouldn't say the risk sentiment is really off at all, actually. I mean, look at the S&P. It's doing very well. So thoughts on yen? Okay, this is good. I'll cover dollar yen then for my last couple of minutes until Chris Pulver comes to take over. Excuse me. So dollar yen is interesting because we've got a couple of different things to keep in mind with this. So we've got obviously I'll have to start from the beginning, I suppose. So the new PM in Japan was elected over the weekend, and the markets didn't price it in. It was basically a complete surprise election in terms of the markets, and that's why we had such an aggressive lift. But it's not just because it was the surprise election. It's also what, I can't remember her name, please forgive me for that, but her policies are very different to, I suppose, what we've been expecting to have from Japan and the yen. So she's a bit more, I can't remember the term, but she's basically more in favor of, I can't remember the term. I'm really sorry, I can't remember the term. It was a bit more basically on rate holds, rate cuts. She's not in favor at all of rate hikes, which is obviously what we've been wanting to see from Japan this whole year, and basically last year as well. So it's been interesting to see the market's reaction, because we've been pricing in this idea that we're going to have this path to normalization continue, and it's basically been wiped out. That idea is almost completely gone now in terms of what we're expecting. So dollar yen pairs, in my view, are now very bullish. But the next problem then arises of, are we going to get an intervention? I think it's very likely, actually. So what you need to also think about is, what do we normally see when we have an intervention? Well, the answer, generally speaking, is absolutely nothing. We get no warning, no heads up. It just happens. And if you're in buys, then tough luck, you're going to hit stops or break even. So I don't want to be a buyer of dollar yen, because I am very worried that I'm going to buy it and we're going to come up to maybe 155, somewhere in this area, intervention, taken out, maybe fill this gap and then continue higher. Obviously that's in a perfect situation, but yeah, buying dollar yen face value sounds like a great idea, and it is fundamentally, but when you peel back the onion layers a little bit, it becomes a little bit more of a risky position to hold. Intraday and scalps, I think, are fine, but again, if you're a swing trader, it's going to be a bit of a roulette spin, I would say. So if we could see dollar yen come back down, fill this gap, which does normally happen in FX markets or currency markets. In fact, I would challenge you to find a gap in the currency markets that hasn't been filled on majors anyway, obviously not exotics and crazy markets, but anyway. So I would like to see this gap get filled. Then maybe I would take a long position. But that's pretty much the only situation. I don't really want to be involved until we've seen this gap fill. Hopefully that makes sense. Don't short full margin. No, please don't. Chris. Oh, it's Chris Pulver. Good morning, Chris. Oh, sorry. Good afternoon, Chris. Can you do Aussie CAD? I can't do Aussie CAD, unfortunately, Diego. My time is up, and it seems like Chris Pulver is here to take over the show. Guys, don't leave. As I said, Chris is here, and Nick will be on in about half an hour to cover FOMC with you and with Chris. Guys, have a good one. Stay safe, and I'll see you all very soon.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
What is happening, everybody? Happy afternoon. We've got FOMC minutes coming up in about 30 minutes. Just minutes. We'll see if there's any price action to play out. The market is back up towards and testing all-time highs in the S&P. Quite the turnaround from yesterday. We were down about 0.4% yesterday. S&P dropped about 50 points. But we're right back into positive gamma territory. I think this is a really important tone and theme that's been happening pretty much the entire year since the bottom in April, which is markets just get above a certain threshold in the market for intraday trading. 0DT provides a buffer, lots of selling puts, lots of selling calls. Market drifts up, or at the very least, just selling puts to create just kind of a daily floor. We've seen floors show up during FOMC events. We've seen floors show up during surprise news like Powell's going to be fired by Trump. I mean, all these things are just like the floor has been in very consistent. And here we are right back up to all-time highs. NASDAQ, take a look at the indexes. So SPX daily chart, we're right back up towards these all-time highs. Yesterday's candle did look a bit more decisive. The weekly price action is still bullish. Are we going to, poke and exceed? So this is the high from last week. We did technically test it. We're right back up to the highs again. So today, are we going to be pushing into all-time highs again, or are we going to be retreating? One thing that has not happened for a moment, let me go back to a slightly higher time frame here. So since July, we have seen all-time highs with pullbacks, all-time highs with pullbacks. I'm a little shocked that we're not getting something that's at least acknowledging a pullback. This was July 31st to the 1st, all-time high pullback, all-time high pullback, all-time high pullback, all-time high pullback, all-time high pullback. Here we are sitting at this resistance level around 67.50. Are we going to see some type of pullback? We could pull back shallow to, this trend line. We could pull back towards the 21 period moving average. The bears would take structure over if they get below 60. This is 65.70. This low and this FOMC low, it was 65.70 and 65.50. So the bears would gain an upper hand in the near term if they take out those lows. The bulls right now are in full control in the driver's seat, not relinquishing any control. And here we are just back up towards all-time highs today. It is a little different to see gold ripping at all-time highs. Silver is testing all-time highs. Bitcoin is just off all-time highs. S&P, NASDAQ, Dow, Russell at all-time highs. It's like the market can't get enough risk appetite right now, and yet everyone's talking about this bubble. Sentiment will print later today. We'll see what this gives us on the AAII sentiment survey. They should be printing after hours today. So the bears have taken a step down. So we'll have this print for the 8th. We'll see if the bears take another step down with less percentage. We'll see if the neutral camp continues to stay in the teens, and we'll see if the bulls get a little bit more bullish. As a light contrarian, at least in the near term, I think the market does have at least a sideways phase coming, or maybe a pullback. I don't know if this is no news is good news until the government reopens. It's not looking promising that by this Friday, non-farm payroll on the 10th is probably not going to happen. But from what I hear from the government worker side is that there's a major pay cycle on the 15th of October. That would be what day? Next week, Wednesday. So if we don't have the government open by the 15th, you're going to have millions of workers without paychecks. And people are working right now in the government. Essential workers are working with no pay on the horizon. So if they're not getting paid by the 15th, there's some, I don't know, I'd say some political disruption. I know nobody seems to care right now in the overall markets because you just ride these stock markets all-time highs. But FOMC coming up in the next 30 minutes. We'll see what the comments lead us to for the end of the day. I, for one, would like to see price, if it's going to stall at these highs, intraday price action-wise, we started out with yesterday's close. We were up well above the expected move for the day. The plus or minus was about 28 points. And from yesterday's close, the market is up about 40 points. So we've already exceeded that for the day. With the gap open and the low on the day, we've already exceeded that for the day. That's 36 points. So if we can keep this within from the opening price, the low of the day, yesterday's close, plus minus 27 points, I would think that maybe we stall and work our way back down to some type of equilibrium, or just be within 27 points. So I would love to see price back below 67.50 by close today, if possible, just to let the market makers kind of officially do their job and guardrail a day. I do have some sell call levels up higher. I'm doing a 65 by 70, 75 by 80. I'm looking to sell up into these resistance levels at the 100 and the 150 ATR. That's also my VIX box high. The VIX took a nice little nosedive today from 17 plus down into the 16s. We've had a somewhat elevated VIX these last couple of weeks. I think a lot of that is just spurred on from the uncertainty with the government shutdown. It hasn't translated into higher volatility in the stock market. Stock market is still persistently higher, going higher. Okay, charts blurry. Let me see if I'm pushing out. I should be pushing out at 1080p. James can confirm, but I should be streaming at 1080. Or check your quality. If you're watching on YouTube, check your quality. Make sure you can get like highest quality possible. Any updates on how long the government shutdown will last? No. I mean, I think that if we go into this weekend with a week 2 of no employment data, it's going to make the markets a little bit jumpier. I think the longest shutdown we've had is still less than like 30 days. So, I mean, that's a long time. It's just a data blackout. I did this. This was my YouTube session yesterday. U.S. data blackout. We have missed. This is potentially going to be 2 weeks of non-farm payroll. The only data that we have is ADP, and we have paychecks, and you got some third party data as well. But there's no labor news, and all we have today is FOMC. So we've seen a variety of Fed speakers dropping some hints into the market. What is restrictive, what's not restrictive. There's room to cut, according to Stephen Marin. It was kind of a maintenance cut from the Fed officially in September. The market's still anticipating confirmations of cuts, which the Fed Watch tool is still giving all that information away. I mean, it's like a 90+%. Yeah, 92.5% we're going to be cutting. This is a 25 basis points cut in the end of the month. So 92.5%. I guess there is it's not even know I'm talking about this. I mean, 7.5% is the Fed pauses. They're not going to pause. 92.5%. This thing is more than baked in. The market's been ripping on it. If somehow this magically shifts from like a 50-50, the market's not going to like that. I mean, the market is right now loving the fact that we're going to be seeing rate cuts. Rate cuts are not coming because of inflation. Clearly, the Fed is overlooking inflation, because if we had sticky and high inflation and we're worried about inflation, we wouldn't be cutting rates. But what we are cutting, or why we are cutting, is because of a softer labor market. Powell even said it. This would have been a couple weeks ago in some conference that he did. It wasn't an FOMC related thing, but it was some economic summit or whatever. But basically, he said this is a low hire and low fire labor market. With the current administration's immigration policies, we do see weaker job numbers. So ADP has been terrible. Non-farm payroll is now showing less than 100K for almost every month. We don't have data yet. So whatever we do get for non-farm, whenever it comes out, maybe it's not this Friday, but the following Friday, whatever labor market data we do see, I don't think the market cares until it's officially hitting the headlines. And it could be a terrible number. It could be a forecast for 52,000. It comes in the, 10, 20,000 range. Maybe it's a negative print for who knows? I don't know. And it doesn't really matter because at all-time highs, there's plenty of slack for this market to pull back and not affect the overall trend. Okay. So I think if you're looking out for the next 3 to 6 months, I don't think 7,000 is that hard to get to. In fact, this blue line up here is the 20% year-to-date target that is above 7,000. I would like to see the market pull back. I'd like to see the market pull back to the 21 or the 50-day in order to offer up a dip for some patient buyer like myself. If the market refuses to go down, then we just keep melting up, stay with that 21 period moving average for any type of support. And we go up another 5% and we're there. So it's not that difficult to think the market can just drift another 4 to 5% higher. In fact, from current price, if we go to, it's 4.8%. So it's less than 5% away. We still have all of November, all of December. And yeah, the market averages, 1 to 2% for those couple of months. We'll be close. If the market has a pullback and it's reflexive or it pulls back, let's say 2 to 3%, do we get a 3 to 4% recovery and then a boost to the upside by another couple of percent to finish year strong? But it wouldn't shock me if by end of this year or into, Q1 or even into summer 2026, we're talking S&P above 7,000. Okay. So I am wanting a pullback, but I've literally been saying this for months and it is driving me crazy that I can't get anything more than this little 21 period moving average dip. That's all I'm getting. So, what I do is I grind the markets every single day. We'll see what today gives us as we have minutes here in about 20 minutes. Like I said, market maker move on the day. I trade a lot of efficiencies. I trade a lot of probabilities. Day to day, the markets are usually pretty efficient. I've got strategies that about 90% of the time I am getting winners based on selling highs, selling lows, selling premium, collecting premium each and every day on SPX. And I'm hoping that today we close less than 67.50. If we go from a plus minus 27 based on this level, plus minus 27 puts me up to around 41, 42 based on where we opened today. Open today, plus minus 27. That is right around the highs for the day. So we opened here. 27 points on the high is that 55 high. If we can reject off of that today, I'm hoping that we get to close less than 67.50. That would help me be a winner for today. Okay. A lot of the trades that I track as far as day to day is looking to see how often price can finish within a 50% ATR range for the day. If we're above that, we're at 100%, 150. I certainly love selling premiums way out here at these extremes because it's very difficult for the market on a day-to-day basis to hit these big extreme moves. Okay. Dave or gold is a serial killer for shorters. You're an idiot if you're shorting gold right now. Gold has been just a madman's rip since this breakout in August, September. And look, I took profit on gold around 39.63. I've given back, that's what, $80 more to the upside on the spot price. My GLD, I got out around 364 and it's up $9. So I'm certainly sacrificing some to the upside. However, I think patience will prevail. I'm certainly annoyed that this is not behaving better. The dollar getting stronger. It's a little weird to see that the dollar is getting stronger. This is kind of my technical outlook on the dollar. I said this during FOMC. This is a great spot to sucker in those sellers and it's long the dollar. And this comes back into a squeeze trade. So the dollar squeezing back up to 100, 101, even up to 102. I think that's a great spot to resume selling the dollar and fading some type of resistance level and not looking to see like stronger dollar. I think in the next, month, 3 months, 6 months, we have a secular bear market on the dollar to keep pumping the S&P higher, keep pumping the NASDAQ, keep risk on going, keep gold up, keep silver up, keep Bitcoin up. All these are fine. But what we are hearing more and more is the debasement trade. I think what makes me a little bit, tentative on gold, the reason I took profit is because now I'm starting to see a lot of retail traders talking about gold. Okay. When the retail crowd starts talking about gold and everybody's talking about gold, I think that's the best time to be trailing stops. That's the best time to be looking to protect some profits and then waiting for dips. Okay. Gold should be pulling back about 15 to 20%. When it's time, I don't know when, but this is a 200 period moving average. What up, Nick?
What's up?
18 to 19% pullback to hit gold that I will be patiently waiting for. I am waiting with if I could be like one of those cartoon, somebody's going to jump out of the burning building. I'm going to be one of those cartoon trampoline holders where it's like, I'm going to catch some gold on a 15 to 20% pullback. But I'm doing it through options. So lots and lots of puts, lots of ratio spreads, dollar cost averaging, just putting in like $1,000 to $2,000 spots at all these EMAs. And same thing on silver. I took profit on silver. And I mean, again, they look the exact same. They're straight up. They're crazy extended over the 21 period. Silver is a bit more volatile. If we pull back maybe 20%, that is a 25% pullback on silver.
Chris, are you all the way out of silver, or you still got a little bit?
So what I did is I closed everything out. I took profits on, I put this in Pulver Alert. So CEF, PHYS, GLD, SLV, I closed everything out. And then what I did is I reestablished an SLV position. Okay. So I started over. And so I bought shares and I added a collar trade. So that means that I sell a call above price and I buy a put pretty much at price. Because I wanted to have, if I'm going to position on silver, I want immediate downside protection in case we need it. But the other peripherals are just, I'll wait for pullbacks. I'll get my dollar cost averaging levels in. But silver, I started because it's still cheap enough. I think the nice story on silver is that we became not just an industrial metal here, but now a strategic metal. And so I'm giving silver a chance to, if and when we break all-time highs here, I think that silver has upside potential that we could be talking about silver in the next maybe 2, 3, 4, 5 years that silver is $100 per ounce, something ridiculous.
I wouldn't be surprised. I think part of it, Chris, is what you just said with the industrial metal. I think it's partially the, demand for it with all the build outs for data centers and stuff. I've been playing some of the like ricochet kind of off center industries. Like I think if I show my screen here for a second, I've got a couple individual stocks that I've traded long on the utility side of things. I know you've talked about XLU. I bought some individual stocks, XEL, and then also NEE, Nextera Energy. So I've been trading these. I mean, these things are going straight up too, but it's a weird market, man. It is. I gotta say, it's gone from like bullish to it does feel pretty euphoric out there. I mean, you got everything just going absolutely chaotic to the upside. Valuations are going crazy. I mean, silver's up 3.4% today. It is really a pretty much everything is on the move. You got crypto rebounding back to those highs. NASDAQ is ripping through those highs, putting in a fresh all-time high as we speak, actually. S&P500 back up there. VIX down 4.4%. A lot of optimism out there, I got to say. And I think it's the right call personally to book some profits if you're in the metals, to be completely honest. Again, I have some physical silver. I have silver in my other portfolios. I'm a long-term bull in precious metals. But I also think it's completely fair to say when you get these kinds of moves, they don't last forever. I mean, even in great bull markets, you gotta know when to take something off the table and reduce your risk. Because one of the things is if you're an investor, a lot of people here are active traders. Some people also do some investing. You have to remember one of the questions that you need to ask yourself each day about your portfolio is if you're going to be investing, position trading, a long-term stuff. Ask yourself every day, every day that you keep something in your portfolio, picture it as you're buying it that day. Would you still buy it today? Would you still buy it today? You have to kind of think of that. And so at some point with the precious metals making a straight shot in one direction, I do think it's a reasonable question to say, maybe I scale back, trail a stop, take a partial, do something with it.
Well, if you think about, I make it pretty simple when you think about just percentages. If I were to have, 10% of my portfolio in gold, or even going as high as like 20 to 30% of my portfolio in gold. Look, if you allocated 20% of your portfolio into gold, it's probably sitting at 30, 35, 40% profit right now. Like it's crazy how well you've done by just holding the allocation. I think if you want to maintain a 20% allocation to gold, which I think is totally fair, if 20% becomes 30, 35, 40, you're overweight gold. So it's not a bad thing to protect. It's not a bad thing to scale back and peel back to that 20%. obviously having some protection to the downside. If it goes up, you can still keep that 20% allocation, but book the profits. I mean, right now, gold and silver, if you've had it in the portfolio, have been huge contributors to most people gains for the year. In fact, I mean,
Oh yeah.
Nick, I'm up like 700K for the year, and about 150 of that is just gold and silver. Like
Yeah.
that's a big chunk of profits this year. So I'm going to protect it. I think it's silly not to, especially with the, the technical side looking like we could have a 15 to 20% pullback at some point. And the weird part is right now, it's like, I don't know what the catalyst is. I mean, at this point, the market refuses to go down. Gold's at all-time highs. Silver's near an all-time highs. Everything's up. I mean, okay, so what pivots? It's like dollars up. Do we have a bond break? Do we have something where the Fed flinches or bought? I have no idea, man. But right now, the narrative is like you're grasping at straws to think that the markets are going to go down other than just like some type of like technical correction. I mean, a flash of 1% to 2% has literally been bought every day since July. 1% to 2% down the market by the dip, like clockwork. So,
well, it's crazy too, because Chris, you and I have been talking a little bit. I joined right as you were talking about the US dollar. I've been, I got some longs on it. I'm long the US dollar, not just on an FX account, but I also picked it up in my portfolio. I went long UUP, pull it up here. I went long UUP, doing just fine with that one as well.
Man.
And to be completely transparent, my thought process when I bought the dollar is I think the dollar has upside. We've had some uptick in economic data. I do also see, if you're a currency trader, which obviously, Chris, you are, but I'm talking to the audience here, you got to be looking abroad. You got to look at other places. New Zealand just had a surprise rate cut to the downside, bigger than expected. You have Japan getting a new prime minister that looks pretty dovish. A lot of economic data internationally looks soft. I'm speaking off the top of my head, but I could show you also. We have this economic surprise meter, which makes this procedure a lot easier. We can look at how economies around the world their economic data are holding up or lack thereof to their expectations. And we actually see, although the average economic data, and this is where it also kind of feels uncomfortable. A lot of stuff is underperforming expectations globally on the economic side of things. The average global score here is actually sort of soft. The US is not screamingly bullish for their economic reports because we did have some soft ADP numbers and NFP data, but we had GDP growth and retail sales and PMI numbers that were pretty good. So US dollar is sort of like the best of the worst, at least in my opinion, at this time. And you've had this huge downward trend this year. We've kind of gone consolidated to sideways, and now looking like we have potential to break. I wouldn't be surprised if the dollar continues higher. And the reason I said I was a little bit surprised by the stock market is that when I took this trade, my thought process was like, I think the dollar could go higher, but I also think that could drag stocks a little bit lower. Nope, not the case. Nothing is stopping this stock market rally right now.
Yep. I just saw breaking news right here in TradingView. Stopgap measure fails in the U.S. Senate for the 6th time. So failed to pass earlier, keeping the U.S. government shutdown in place. So we're likely going to stare at another week with no U.S. data, no unemployment claims tomorrow, no BLS non-farm on Friday. Again, does the market care? It hasn't cared so far. Last week, since we had the official shutdown on the 1st, let me zoom in here to I think I did a 15 or 5-minute chart on the SPY.
Yep.
So the SPY is up. I mean, we're poking fresh highs today. So since the official shutdown, S&P at the lows, we're up around 1.5% post official shutdown on the 1st. Historically, it's 0.4, 0.5% positive. We've had some positive, some negative, but I don't know. I mean, it is what it is. Honestly, it's like you and I keep talking about this. I hope we get a pullback, and it's not something that's like I don't think it's a pullback that needs to scare anybody. I think a double-digit pullback will probably rock a lot of traders' worlds right now. But I think a 2 to 3% pullback is completely normal, considering since July, we've had all-time highs, pullback 1 or 2%, all-time highs, pullback 1 or 2%. We haven't had a pullback in like 4 or 5 days that kind of matches what I'm talking about. And, I mean, this week, for example, if we don't break the highs today, if we don't sit here and close above today, the all-time highs, then perhaps we're staring at a range trade where the market just stalls around this like 67.55 zone. We come back and retest maybe lows for the week. So this could be a little bit of a range trade until the market, either 1, picks itself up and goes higher, which this is the melt up drift mode, or 2, it actually comes back and closes back below. But I mean, until the government comes back online, like I said, the 15th might be the important deadline, because if you hit a pay cycle where government workers are I think it's the tricky one is the essential workers that are working right now that aren't getting paid. So just to so make sure we don't confuse this, everyone's going to be paid and get made whole, but it won't happen until the government's back online. So you could work for the next 20, 30, 40 days. You will be paid for that 20, 30, 40 days. But if you don't receive a paycheck for 40 days or 45 days, that's going to be a huge disruption if we get through the 15th, which is next
right. Because think about everyone who doesn't get that paycheck does not go out and spend that paycheck. Right.
Exactly.
So that is like postponed involvement in the economy. Also, Chris, just to show a little bit of this this kind of options flow right now, I'm just looking at the put to call ratio just because I was curious. Interestingly, right, we've had yesterday was a down day, today's an up day. Interestingly, you had a ping pong on options flow. So everyone sort of did the wrong thing. They bought calls when it was up. They bought puts big time yesterday. It's just a ping pong effect here right now where we've seen, to your point, what this could suggest about a range is, people bought puts on this day. They bought calls this day, right? So it's just going back and forth here in terms of the stock market itself. We could also just take a quick look at gold, which I'm curious about. Take a look at call volume on gold. It makes me a little bit nervous with the precious metals too. So we're looking at specifically GLD options flows here in terms of the daily put to call ratio. Obviously, gold has been just straight to the upside here. But take a look here. We have a high surge in call volume here recently. So the crowd is pretty bullish on gold at this moment, chasing it a little bit here. So I do think that, while that could continue to last. Clearly, they were right for doing that in the last few days. I think that topples over at some point. And again, you said it earlier. I mean, take whatever trend metric you want. Put your moving averages on the screen. I made this point earlier in the week in one of my videos, but gold could pull back all the way to the 200-day moving average. That's like 20% away. Let's say it's 15% by the time. That's still a bull trend, right? So you have so much room to pull back. And again, to your point a second ago, we're a 10% correction in the stock market. Same thing for precious metals, guys and girls. People who are really bullish up here, who are chasing this thing, a 10% pullback to them is going to look like Armageddon. But to the rest of us who are waiting patiently and just like fingers crossed, like, hey, I hope we get a pullback, but if we don't, not going to fight it. That's been us for like 2 months. If we get the pullback, to people who are leveraged and chasing things like gold, silver, stocks, don't even get me started on AI stocks, right? Those pullbacks are going to look like nightmares to those people. So this is where I'm saying to, everyone, just be a little bit careful. It feels like a new paradigm always before, you get a pullback. It feels like it's never going to come down. And then one day you wake up and everything is, the dynamic has shifted. And everyone who gets too comfortable with this, stocks and gold go up every day, just be careful because they don't. And you can get yourself in trouble with it. Wait for pullbacks. Don't chase. Don't fight it. Just stay ready.
I think one of the best things to do is if you're looking, so whatever you trade, whether you trade gold futures or GLD, I have chart alarms on every one of these moving averages, Nick. So the 21 period chart alarm set, the 50 period chart alarm set, 100, 144, 200 chart alarm set. All I want to see is if price touches them, I'm probably going to take a little stab. So that's in the Pulver alerts at like 1,000K position, 1,000K, a 1K position or a 2K position. It's a cash account. I'm doing $1,000. If it's a margin account, I'm going $2,000, and I'm just going to dollar cost average in for a 5 to 10K position. That's kind of a restarting of my core. So I'm trying to think how many shares of GLD I had. I had like 3,500 shares of SLV. I had just under 1,000 shares of GLD. I don't feel bad about taking those profits. Those have been, also too, your runs in gold and silver this year. Did you establish like fresh positions in 2025, or have you been riding some of these a little bit longer? Because I've been in gold and silver for like the last 3 years, and now I'm to the point where it's been a good run. I'm going to start looking to protect some profit.
So I'll have to make a video about it sometime, Chris, but I started buying physical silver in like 2021, 2022, just as like a hobby. So I guess it's not the same thing as a paper trading account, but yeah, no, in terms of the main portfolio that I talk frequently about on the channel, those were all fresh trades in 2025. I traded, the last 2 years, I've only taken buy trades on gold and silver. I don't like the short side. Obviously, with hindsight, that seems pretty smart. But throughout the whole period of time, I've just not seen a really strong reason. Inflation has stayed sticky for the last few years. You've also had, I've had worries about the economy slowing down, like many people had. So, I've stayed long precious metals. off and on in the main account, but then on side accounts have just stayed long. I just have longer term positioning that's just been bullish on gold and silver. Also, just a real quick plug, everybody who is here with us, if you are not already, the tools that I've been using here, if you want to get access for free, we're giving away 3 free copies on Friday. If you want a chance to win, here's how you can join the Telegram channel right here on your screen, or the QR code right above Chris's head. Just scan that and you can join the Telegram channel completely free. Stay up to date on the giveaway challenge. We just had it dropped in the live stream chat for you if that's easier. But join us. It's easy to join. Takes like 2 seconds. Just scan the QR code, join the Telegram, and fill out the form in there to join the free giveaway. Guys, we got where are we at? We got 1 minute.
It's 1 minute. Yep.
Yeah,
I'm just going to look at Financial Juice, read some headlines, see if anything pops up that's pressing. If there's any, red headlines that pop up, we can just kind of highlight those as we go. But, we're sitting here near all-time highs on all U.S. indexes. Pfizer, $5 credit, we just got filled there. Want to check something?
Yep.
I just
So
got
we're gonna keep an
$5.
eye on just kind of headlines. Those in the audience, if you also want to share with us anything that you're seeing. Now, please note, we get the question every time.
Okay.
Powell's not speaking. It's not a press conference. It's not a speech. It is essentially scribe notes from a closed door meeting that the Fed officials had. We are getting the notes publicized. Should be coming out now. So we'll have that. We're going to be scanning for headlines as we speak, and anything you guys in the audience find, feel free to share in the comment section. I'll try and pop it up on the screen, and then Chris has also got it pulled up. So we're going to keep you covered on what is happening. Initial reaction, dollar still looking firm here, at least out of the gate. Take a look, 1 minute chart, dollar index staying firm. Stocks not moving too much, but slightly lower.
Just a little bit. Yeah, we're just below that 67.50 handle for the day. I would love to see it stay below 67.50 for the day. Just some of the XPX trades I have, I wouldn't mind seeing it come back into the 40s. So like 40 or lower, kind of neutralize the day around like 40 to 30 zone. I'm not seeing any headlines as of yet. Here's minutes. Oh my gosh, dude, it is literally a paragraph.
All right.
Let's see here. Generally published 3 weeks after the day of policy decision. Minutes can be viewed on the board's website. Okay, let's see what it says. All right, it's getting some extra trades on Pfizer. No recap for the minutes. I'm going to go to breaking news.
I'm just keeping an eye on it too.
Yep. So news feed, Besant. Yep, same stuff. I'm not seeing anything as far as like highlighting the minutes.
Dollar initially popped higher, but has since just a little softened up. Nothing huge here though. No significant moves just yet.
So we just barely cracked. The highs are around 67.55. We're right back up to them again. We're at 67.50 right now. Yeah, we'll see. I mean, the market can celebrate having a green day. It just, I'd like to see it not sit here. My least favorite trading for 0 DTE is when the price is closing literally at the high of the day or the low of the day. I prefer it, and this is what I typically see when we have the markets going to a high of the day and then hitting a ceiling, or going to a low of the day, hitting a floor. Yesterday was a good example. We dropped all the way down to 6,700, but we ended up closing at 67.14, 67.15 for the day. So having at least an opportunity to defend a lower high, that's kind of what I'm looking for. So little to no reaction, though. I'm not seeing much.
Yep, I did get this headline here. Fed meeting minutes
more this year.
Most said likely to appropriate to ease policy more this year. We kind of already knew that. I've been saying, I think that the in this dark lights out period where we're not getting data due to the shutdown, I think the Fed's default is going to just kind of go based off of the trajectories that we were already looking at with the latest data, which is sort of, hey, jobs market data has been cooling. We know that to be true. We can just without having data, we can still look at least what the trajectory of the data has been. Just to give you guys a high level of that, JOLTS job openings. So job openings in the United States have been in decline consistently. The non-farm payroll, though we didn't get the latest data, has been consistently trending down. So ask yourself as I go through this, does the Fed need to ease rates? And the obvious answer is, yes, But what makes it not so obvious is that you also have something sticky in the inflation department. Take a look at CPI. CPI has bottomed out and actually has been on the rise again. And this stickiness in inflation, sort of, you have rock and a hard place, right? Because on one side, you have jobs data that says cut the rates, spur the jobs market because it's hurting. But on the other side, you have prices have just finally, after the last few years, let's zoom out just a little bit here, time horizon wise. Take a look at the last 3 years. Inflation has just kind of come back down from those highs. We've just gotten down. Now, we're not at the 2% target, but we've made substantial progress. And what the more hawkish members of the Fed and economic commentators are saying is that, look, if you cut rates too soon, too fast, we're going to unwind the last 5 years' work that we did, right? So it's a hard story, man. Like, you have jobs data hurting, but you have inflation I wouldn't say inflation has been defeated, right?
It certainly has. I mean, you can't put it back in the box, dude. I mean, the hard part is we're talking about administration that wants to grow aggressively, and to do that, we need higher inflation to grow. And it's not good, because what happens with the slightly, I'm not going to say like a hyperinflation phase, but I'm going to say sticky or persistent inflation that everyone has been feeling for the last couple of years. And on top of that, you have a weaker dollar across the board. That happened. We had like one of the worst slides in 40 years on the dollar. I know it's short-term strength now, but the dollar slid like 10% this year. Yep. But you have purchasing power that's been going down. We talked about the debasement trade, this last week. Gold's up, silver's up, Bitcoin's up, stock markets are up, the dollar's down. You have inflation that's like 25% since 2020. You have purchasing power down 20%. So you get less with your dollar now, and people have been feeling this for 5 years. And so us telling people we're going to grow our way through this, we're going to grow at all costs. You're going to do it with a weaker dollar. You're going to do it with loss of purchasing power. You're going to do it with stickier inflation that nobody likes. Nobody likes it. But it's not going to be fixed overnight. I think that the path forward is better to want to grow versus just trying to put the genie back in the bottle and try to squash inflation altogether, because that means essentially zero growth. If you want to squash inflation, you're going to raise rates to be so restrictive, and there's going to be little to no movement in the housing market. It's going to be, I don't know. I mean, nobody wants to see at this point a risk off environment.
Let's talk about something
to do it is just grow with it.
Something you just pointed out that I think is critical for everybody, here. One thing that we've been talking about with the precious metals that I think we cannot ignore is the idea that central banks, for the most part, the major central banks, I've got here the US, the Japanese central bank, the ECB, and the Bank of England, right? Mm-hmm. We could even add more to this picture. Let's just add Canada and Australia. Why not?
They're all dovish, man.
We're looking at the projection for interest rates. Yep. All of them are expected to cut interest rates. Now, Bear with me here. That's bullish for gold. But you know what's even more bullish for gold is that inflation across a lot of these places is still elevated. Yeah. So you're talking about cutting interest rates. We are projecting to cut interest rates because economies of the world are showing some signs of cracking, right? That's a reason to cut interest rates. But you're doing so at the same time that price stability has not fully been beaten. The risk, and I think this is a huge reason why precious metals are exploding higher, is because people are saying, okay, I see the trend. Global central banks, it's not just a US story. Global central banks are cutting interest rates. They're easing monetary policies to help with slowing economies in an environment where prices are already rising above trend. So you combine that, and no wonder people are saying, wait a second, this is why we stay long gold and silver. Yeah. Because we don't trust this. If you're a smart investor, you look at this and you say, wait a second. We're going to print into oblivion, not just in the US, but globally. Where should I put my money? Well, probably not in fiat currencies. That's why gold and silver are monsters.
Agree. I think that time right now is everyone's best friend. I think if you look out, 3 to 6 months, S&P's pushing, knocking on the door at 7,000. All-time highs in all the U.S. indexes. I think that gold and silver, to have such a stretch away move, having a 15 to 20% pullback to a 200-day moving average, at the very least, it starts with some sideways. If gold just goes sideways, maybe it gets boring for a second, and it allows some of these big moving averages that are so far overstretched to catch up and kind of reduce the size of that potential pullback. I think the biggest shock in the next couple of months here, Nick, would be if something weird happens in the US bond market. If we see like an aggressive rate of change in the bonds, the aggressive rate of change in the yields, the Fed is baked in, 94% and 80% for October, December rate cuts. What does that do to, our 10-year yields? They are not, right? 10-year yields are higher again. So we are now, since the Fed officially cut in September, that would have been, what date was it? September? Was it like the
17th
teens, right? 17th? Yeah.
Yeah.
So we're up, 11, 12 basis points. It's not nearly as aggressive as what we saw back in 2024, but yields haven't gone down. They haven't had an aggressive rate of change. But that's where I see like the potential, outlier risk is like some aggressive rate of change in the bond market or the yield market. But to see, dollars moving higher, gold's moving higher, we're sitting at all-time high, still elevated in the stock market. It's like, it just don't fight the melt up, man. I mean, I might get a paper cut loss today if it doesn't close below 50, but it's like overall, I'm positive on the day. I'm benefiting from the melt up almost every single day. And it's exhausting talking about when this thing's gonna, top out for a 1 or 2% pullback.
You just can't do anything. I mean, honestly, all of those things. And again, what's tough is, there's a lot of people out there making the mistake of like caving and throwing in the towel, and they're chasing, or they're, just shorting gold and silver and stocks with tears in their eyes, right? Like it is a mind numbing thing when stocks and everything is just sort of melting up. It's actually a really difficult environment to trade in, because you feel like, hey, I should be doing more. But also sometimes the best thing to do is to do nothing at all. Also, just to follow up on your idea, again, 10-year yield, Fed's cutting rates, 10-year yield still up. That is suggesting that, again, the bond market is still potentially worried about inflation or the ability for the government to pay back their debt. We can expand the conversation to the UK, going off of what I was discussing. Again, this is a global phenomenon. Probably why gold and silver are ballooning so higher is because gold and silver look at fiat currency across the lexicon, not just the US, right? So you've got UK, the European Union, Japanese bonds are hitting multi-year highs. I think the Japanese 30-year yield hit an all-time high recently.
Yep.
So you're looking at and that one just makes sense. Japan has a horrible debt to GDP ratio, and that's, again, very, very concerning, I think, to a lot of people who are like, where do I put money? Which fiat do you trust? And for a lot of people, the logical answer is none of them. Go into precious metals, the ancient hedge to human activity.
Speaking of Japanese yen, so this new prime minister that's coming in, we're probably bringing back the Abenomics type regime where it's going to be extremely dovish. Now, I don't know if this is a full-on, fundamental and technically driven weakening of the Japanese yen, or if this is, these last 3 days have been so inefficient that if we pull up the, dollar yen or any of these yen crosses, I just kind of marked this up today. So at first I was looking at this larger head and shoulders. That would be, and I've said this for a while, if we break the 140 floor, left shoulder, head to neckline, right shoulder, obviously confirmation was critical. If we get a break of 140, we're going to 120. We're not there yet. So what I have is you're looking at higher lows right now, higher lows, higher lows, higher highs, higher highs. I don't know, Nick, but this last 3 days plus that weekend gap is so massive that I don't know if this thing runs just straight up into resistance around like 154, 155, and then we pull back into this channel and maybe we fill that gap. Or is this something where it's like this market comes all the way back to the 159, 162 handle, and we have this, would the Japanese yen be that good to give us such a perfect technical top where it's like resistance, get a short trade running, it goes all the way back to 140? And I said this, if we're going to see a stronger sustained move of Japanese yen strength, it's not good for risk appetite. If we see that much strength sustain in the Japanese yen, it's going to be a carry trade unraveling. It's going to be crazy risk off trading in the stock market. If you want a taste of it, go back to summer 2024, July to August, when the market dropped 10% in 3 weeks. That was a deleveraging. It's like, so anyone trading Japanese yen looking for strength, the only trade that I'd even be remotely interested in is either Swiss yen. If we're going to go down, it's like Swiss yen sitting here at crazy all-time highs. And if we can give ourselves a topping pattern, maybe this rolls over, breaks a low, gets on the right-hand side of the trend line, and I start selling some little sell stops over here, that's a ridiculous trade. We're talking a 2,000 plus pip opportunity where we get a topping pattern around 190 and we've got a floor back at 166. That's a huge trade. But without confirmation, that trade is worthless. you know.
Yeah.
And the other trade would be FXY, which is essentially a stock version of owning the Japanese yen. And I am probably going to do this. I still own FXY shares around the mid 50s. But if we come back to these levels, I am going to look to buy some FXY around $58 or $57 and just hold it. I hope I don't regret that, but I think that I'm going to have to hold it. I just don't know. I mean, how long does this new prime minister last? Do we start to see 50 basis points, which is where the official cash rate is for the BOJ? Are they going to cut back to 0.1? Are they going to cut back to 0? Are we going negative interest rates again? That's kind of why the market priced in such an aggressive dovish move on the Japanese yen this week. Is, I mean, Shinzo Abe was like one of the most dovish PMs that the country's ever had. So.
Yeah, I mean, it's an interesting story. I think, between that and the surprise cut from New Zealand, they had a bigger cut than expected. I think I didn't follow it too close, but I know we cut interest rates last night. New Zealand. I mean, the dollar. That's another reason why I think the dollar is having some relative strength. Is simply, Bank of Japan had been sort of expected to begin the process of hiking rates. That comes into question with the new prime minister, but.
Right.
We'll see. I think, currencies, we know over longer stretches of time, you got to be real careful with this one with the Japanese yen because it's very, very volatile, but they tend to chop back and forth. So I do think I've seen a lot of people saying, talking about intervention with the Japanese yen as well. If it gets too out of hand, there may be that may be not something that the Bank of Japan wants, may step in. We'll see. But again, crazy move when we look at some of the yen crosses, dollar yen. I mean, here's my confession of the day. So I went long dollar yen here. I bought a little bit more here, closed it like right in the open. So I missed the second half of that leg. But,
wow.
My thought process was we were going to come up here and find some resistance. No
Sure.
cigar. We are looking like we're making that move here. We'll see, but I wouldn't be surprised. I mean, the yen is a crazy, crazy currency. It's been sort of in this grindy uptrend on dollar yen. So perhaps you get that entry that build a bigger position on the FXJ idea you just had.
Yeah, FXY. EWJ
FXY,
is the Nikkei, which could continue to rip higher as well. EWJ is a good way to trade the Nikkei. I've been in this one since summer 2024. So this one's up to some fresh highs. It already hit my measured move, so I went high to low. That's my projected high. I should be taking profit in this, to be honest. But I feel like if we're going to have a crazy weekend, there's more upside here. As if we're melting up in the U.S. markets, we'll probably melt up in the Nikkei as well.
That was a
FXY.
That was a great play, Chris. I mean, the Japanese stock market has been. You want to talk about everybody's hyped up on U.S. stocks, but I mean, international stocks are going wild this year.
Well, we're up 38% since the low. The nice part is, even during Liberation Day, it was the same pullback as we saw back in July to August. So technically it was a great spot just to be adding to it. So I just bought shares of EWJ around 61. Once we got back to the highs, my break evens is blue line here around 66. So now we're up to, 81.70. I'll just kind of hang out and see, maybe it gets up into 85, maybe it gets to 90, maybe we go to 100. I don't know. But I'll hang on to it. We are just getting back to the intraday highs, by the way, for today. So if I zoom in, we're just kind of pressing up against intraday highs. We are officially poking all-time highs again for the S&P. Do we stretch to the 67.60 zone? I'm trying to get filled on a couple of bear call spreads. I've got a 65 by 70 pending. Let me see if those are doing anything right now. SPX. So I have gosh, man, it's only traded for, this is what sucks about 0DT is I've got a good level I'd love to get filled at, but it's only offering 30 cents. And I'm just like, if I'm going to risk $500, I've got to take $1 credit. So I set my, risk reward where it's like, I'm going to take the trade at an appropriate risk reward and probability. Even going, 10 wide on these trades, I'm still only seeing like 10, 12 cents of credit. So it's late enough in the day that we don't really have any kind of late day credit offered, but obviously if price is going to push up, here is the 100% ATR for the day at 67.61. The day closing, like I said, it kind of be a generous move for the market, but if we, push back down below 67.50, that'll allow me to grab a win this morning from SPX. Otherwise, if it doesn't hold resistance at all and we close up the highs, little I can do about it. It's just the market closing at highs for the day or closing at lows for the day makes it very difficult in a 0DT environment. Real quick on the FOMC minutes, did you see any headlines? I saw a couple of things that There's acknowledgement of, slightly higher inflation in the future. All participants supporting a rate cut from September. GDP was revised up. There is some, headwinds for inflation, headwinds for labor, but it's, again, just minutes. The market's not really taking it like it's bad or bad news. In fact, I saw very little on the labor side. It was all pretty much inflation and what they did in September. That's kind of what the minutes reflected. I didn't see anything that kind of points to what we are like right now with the government shutdown. I don't think they care.
Yeah, I didn't see anything about that either. I was kind of looking at that as like any commentary on what to do with no data, but didn't see any of that. Also, somebody in the audience asked, in terms of gold pullbacks and mapping it out, here's the thing, right? Like I have a hard time. There's Chris. When it comes to gold, right? Pullbacks. Here's the thing. The challenge that I have with this, we talked about how a pullback in gold on these moving averages still is bullish, even though it's far away for people who are maybe short-term day trading or short-term trading to any capacity. Here's the other side of that. Because they're so far away, there's really not an obvious entry place for me to get involved here. And I know it's a little bit frustrating because it's like I would like to be back in the precious metals. You talked about restarting your SLV trade idea, Chris. I mean, for me, it's like I can't even really look at gold with a buy side until you start getting down into, let's say, 3,800, 3,700. And even then, that is, you're talking about a pretty aggressive entry. So to me, it's like, where would pullback start to look good? To be completely honest, gold is kind of untradeable up here for me. Like, I think it's a very difficult thing to make a directional call from here in the short term, what gold is going to do. If you get some sort of, sellout, get people a little bit worried about gold. I like that wall of worry when it comes to buying a market or selling a market, right? I like give me a reason why people are selling gold. But right now I see no reason to sell gold. And so the natural path for gold, in my opinion, is, look, if we're doing this for another 2 weeks, to be honest, that's the most likely scenario I see right now. Like, I don't see, next 2 weeks, it's going to do this, right? Like, I can't give you that. And I know a lot of the audience is looking for that. They're like, hey, when is gold going to sell off? And being completely clear and transparent about this, I'm not going to buy it up here. I'm not going to short it up here. And although I'm not going to take any trades, path of least resistance on this, trend is your friend, man. Like, this is hard to fight.
Yep. And it's not something to fight. I mean, again, we're kind of grasping at straws when we're thinking about what type of scenario could make gold fall, what could bring the stock market down. I could see the U.S. government coming back online, either early next week before that 15th pay cycle, releasing non-farm data that's just abysmal. Like, if we print negative non-farm, that could be pretty nasty for the market to be like, well, that means more cuts are coming. And that's a weird thing. It's like this twisted way of thinking about the data. Well, if the news is terrible, Fed's going to cut more rates. Well, I mean, it's already baked in, dude. It's 93% baked in. They're going to cut in October. What else are they going to do? They're going to cut by 50 basis points. It's like, that to me is more disruptive than just staying consistent with 25, 25, 25 for the next 3-4 meetings. It looks like from October, December, and into Q1 into like March or April, there's going to be 3 additional cuts, which puts us at 4 since September. And then we have maybe 1 more cut in 2026. So we'd have 5 cuts total. That's what the market's pricing in right now. That's what's been discussed. So I don't know how terrible news would be like anything different than the melt up.
Let me give you something else to think about, more so for the audience. But I remember, and I'm sure you remember this too. So what you just outlined reminded me of something in 2022. Now, if we're just what you just said, right? Like, so jobs data, like all news, the stock market right now is finding a reason to make it bullish. Like, if we're talking about NFP, if the jobs data is very strong, the market will say the economy is holding up. Now they don't want it to be too strong, I guess, because then, that might hurt the rate cut story. But let's just say we have,
we meet
on
consensus.
par. Yeah, we have within consensus, pretty good jobs data. Stock market would rally. If you have stock market or NFP data that is negative, the market still rallies because it says, hey, rate cuts are really going to happen now.
Yep.
And so we get into this mode, this grind mode. And this is why, by the way, they say the trend is your friend, because sentiment makes up a big, factor here. Sentiment is stocks are going to go higher and bulls are going to sort of ignore pessimism until they aren't anymore. Now, the reason I bring this up is because a couple of years ago in 2022, it was the exact opposite. I know it's hard to believe this, but back here, we were getting inflation worries everywhere. Everybody was panicked about inflation because it meant the Fed was going to hike. And we were hiking like crazy. So the market was freaking out about it. Well, back then, if you had strong jobs data, guess what? The market didn't like it because strong jobs data meant we got to keep rates higher or even rate hike them higher because it's going to cause more inflation. And if you had a bad jobs print, guess what the market did? Still sold off because it didn't like the idea of, okay, we have high interest rates and high inflation. We don't want the jobs market to slip. So this is a perfect example of how it depends the narrative and the environment to a certain extent for what the market decides to do with the data. Again, right now, if you want to talk about what's going to get the stock market to roll over or gold, I can't give you a reason. It's a really difficult thing to try and say like, hey, what's going to get this market to crack? I don't know. And so, because I see an environment where we don't get very many rate cuts and it's still bullish for stocks because corporate earnings are so strong. So like to me, it's you just don't fight it. That's the brainiac move is just to say, okay, it's up a ton. What's going to get it to come down? We just wait for the narrative to tell us when it's changed, not try and call it.
And it's okay. I mean, here's what I'll say. I think all this talk about gold and what's happening, here's what I will say. If you desperately want to be in gold or desperately want to be in silver, here's a trade that I took yesterday. Okay. So it's basically getting back on board with the idea that I just took over 100% profit on silver and about 70% profit on gold. And if I want to get back in on SLV, I started SLV. I'm gonna wait a little bit longer on gold. It's also a more expensive ETF. So what I did is I bought shares at 40. It was what did pricing yesterday? It was like $43.50 or something like that. So I bought. So I took profit and then I started new. Okay, so I bought 100 shares at 43. Let's just say 43.50. And what I did is I bought a $43 put, and I went out to like December 26, like literally a year plus out, because I want time value in the trade. If I'm going to get a downside move, I want to get it right away, and I want to have some time premium left into it. But I went out and bought pretty much an at the money put, and I sold a $50 call with the same expiration. So what limits my trade is if gold or silver rips to the upside, I'm going to cap my gains at $6.50. Now I did this collar trade for 35 cents credit. So that gives me a break even of around 43.15. That's essentially my break even on SLV. So to the upside, Nick, I'll make $6.85 if we're above $50. But if we drop it all I'm trying to do is establish a core position, have downside protection, and then take those shares, improve my cost basis on a correction, and then lower my price down to like $38, $37, $36. And then from there, I essentially buy the dip. But if we melt up and rip up, I am capping my upside, but I can always get back in. If I get it called away at $50, I can get back in. I can do it again and again and again, but I always have downside protection. So that was a hard decision because obviously I don't want to cap the upside, but I'd rather cap the upside to finance this trade, because if I bought the shares at 43.50 and then I bought a put to protect my downside, I'm going to have to pay $2, $3, $4 for that put, which is going to increase my break even. So I'm trying to maintain at least same cost or lower cost, have downside protection. And if it gets called away, I still have, $6 to $7 of appreciation on price.
There you go.
So that's one way to, if you're just struggling to figure out what to do, you can buy shares and have downside protection with some appreciation premium to the upside, getting it called away, or wait for these moving averages. These will get hit. I mean, we might not pull back to the 200-day moving average. That is like something is dramatically wrong if all of a sudden silver drops 20%. Something is dramatically wrong if gold drops 15 to 20%. Like something is clearly off right now, but it's probably not going to happen. A bull market will find a 21, will find a 50. It'll find very easy dynamic support. But that's when you like the patience pays off. And when you get to that point where you're so eager to push the button and you don't know what to do, it's like, look, you can always get in, but just have downside protection and know where your break evens are at. Otherwise, exercise some restraint and some patience and just let price come to you. I'm telling you, these moving averages will get hit. They will get hit.
Yeah, and also just for context for viewers who were maybe a little like that was a little above your head in terms of options. Chris is a very experienced options trader. So what he's talking about is using options to give yourself, it's in the name, give yourself some options with what you want to do, right? So
Yep.
like he's talking about, buying a put to cover downside, right? Puts are bearish bets. So for the beginners, if you want to learn more about what Chris is talking about, you can consider joining our Polar Alert service. It's not free, but it is available. And if you are serious about that, if you want to learn the ways that we trade, you can consider joining the VIP group and getting access also to the Polar Alert service. If you're interested in that, if you want to join our signals room, here's the best way to do it. We'll drop a link here in the chat to where you can speak directly to a member of our support staff about the signals being shared. Again, Chris and I, we've done this for a long time. We share authentically what we're doing in the markets. We're not always right. Markets are hard. There's periods like this. These are very difficult periods to try and be a trader, right? Right now, it feels like the only logical solution is just to buy and hold. But of course, we know markets can drive people crazy, and there's going to be a lot of impatience out there. But we've done this for a long time. Patience pays. Be constructive. Be careful. Build a logical trade plan and be aware that, these moves, they're crazy, but they're not going to last forever. And as wild as it may seem to think gold is going to pull back to the 200-day moving average, it's going to happen eventually. It's guaranteed to eventually happen. It just may be a different way you think. It might be consolidation for a year, and then we hit the 200 and it's, right here. So, patience pays.
Yeah. And, I know on the option side, I mean, maybe there's a bit of a learning curve to it. Look, I will argue this about options. I have a $27 starter course that just helps you understand, forget the fluff of learning deltas and applied volatilities and all the crazy Greeks that you hear about. And what about, buying calls versus selling calls? All I'm saying is I want to make it realistic where if you want to do something in the charts, like Nick could communicate, this is what I'd like to do on UUP or do it on FXY or do it on gold or GLD or SLV. If you want to be bullish in the markets, you can do it with far less capital required trading an option. And you can be bullish every single day. You can be bullish every single week, every single month. And you can do that with risk defined. So gold can go to the moon or it can go to zero, and you're only going to risk what you initially set out on the trade, and you have the reward and risk known ahead of time. And so I want to put that in context because for $27, it's like, look, get you started on at least some of the language or a couple of strategies where if you want to be bullish in the market, be bearish in the market, trade the market sideways, there's a couple of strategies that are very easy to wrap your head around and just understand, if I take this trade, where does price have to be for my risk and reward? And you know that going into it. So a lot of my trades that I have won this year have all been winners of less than 1%. I've had very few home run trades. I'd say the trades that I've had home runs have been gold, silver, because I've held them for the last couple of years and I'm finally taking profits. They've annualized out maybe, 20 to 30% over the year. But my big win, Nick, could probably be Alibaba, Baidu the last, 12 months, because from last fall when China started to rip on kind of Chinese government intervention, I was up 100+% on those trades. But that's kind of it. Everything else has been risk defined, grinding through like 0.25%, 0.1%, 0.3%. And it's just thousands of trades that I do that with. So that way it's never all in. I know, look, I think Stanley Druckenmiller is one of the greatest fund managers ever. And he is a fund manager that from the days of George Soros, he puts all of his eggs in one basket and he watches that basket closely. That's not my style. I am a trader that would rather diversify. I would rather have a lot of eggs to manage. And therefore, every egg, if it explodes or something happens to it, if something weird happens in this sector or this index or this market, that I'm not fully exposed.
Right.
With, of course, at least having some protection. So there's a lot of ways to do it. You can have one trade that you babysit and micromanage to the positive and negative sides. You protect your downside, but still take gains and generate income on it. Or you take a bunch of individual trades. And so for the Polar Alert, you'll see kind of that style is a lot of individual trades that, look, I've got some plays in energy, utilities, industrials, materials. I have plays in AI right now in tech. I put a trade on yesterday in Micron. I've had some good winners. We played some China. We're trading some indexes. It's like, I've got a lot of stuff out there that it's not all in on any one thing. It's like, this is just a high probability income trade. We'll probably make money on the trade. Yep. And if I can help kind of shed some light on just some basic option strategies, one thing I will say, if you are introduced to options and all you're trying to do is buy calls or buy puts, I'm just going to tell you that's my least favorite strategy. As somebody that's been doing this for a long time, it's my least favorite strategy because you can be right on direction and still lose everything in your investment, which makes no sense to some traders. But that's why I don't trade that way.
I mean, the appeal with options, really, I started picking up options in 2022. I've been trading them for a few years, and I've still found some of the simplest strategies for me are really where I've expanded my go-to stuff with it. But really the idea of, buying a put or buying a call, you do have huge upside if you're correct, and you don't have to pay a lot of money. I mean, that's what you see all over social media is brandishing the, buying calls out of the money and then they go crazy. And obviously that is very exciting, but there's some real consistency you can build by actually getting on the sell side of options, selling cash secured puts, selling covered calls, selling, you can do strangles, you can do straddles. There's so many different things that you can do with options to actually, one of my favorite things about options for those who are curious about learning more about options, I do talk a little bit about them on my channel. You can also definitely explore Chris Pulver's channel for a wealth of knowledge there. The thing is, you can also do some directionless stuff, meaning if the stock market, if you think the stock market, if you see limited upside and limited downside, you could make a bet on that. Like you could sell calls, you could sell puts. And if the stock market does this, you make money. If it does this, you make money. If it does this, you do make money. The only thing you don't want it to do is, of course, blow out one way or the other. But again,
if it does that though, Nick, you know exactly what the risk is up front.
Yes.
Right. So the market could do something outlierish for the day or whatever your expiration is. And, I knew that going into that trade, I was risking $500. So that's the worst thing that can happen is, man, this market has not stopped going up. It threatened all my upside. It blew through my calls. Doesn't matter. I was risking $500. It sucks to take a loss, but you can start trading and risking, I'd say probably a lot more responsibly. I think that's one thing that nobody wants to hear. But when you take a huge loss, you'll start thinking about risk management for the first time ever, and you'll change it. You'll change the way you manage your positions because it sucks to take a huge loss. And I've certainly had my fair share of them. I've had some, nasty 10, 20, 30% drawdowns over my career that I fought through. But I've been fortunate that I've never blown up an account. I thought that I was one bad move away from doing it. One of my worst positions ever was being short the Swiss yen. This was before 2015. So this would have been, I remember I was speaking at a money show in Vegas and I was short the Swiss yen and it was blistering higher. And I think I allowed for like a 3,000 pip drawdown. And then it finally came back into my favor. I closed out from a $25,000 drawdown to about $1,000 winner. And I was euphoric after that winner. Now, what's funny is literally 2 weeks later, that trade would have been up 40 grand.
Wow. Yeah.
But the pain of like, I'm upside down, I'm exhausted. The market is beating me up. I don't know when the end is in sight. And then finally it was like a slight gap lower and it just dropped hard. And what's funny is the lesson came out of it was trading anticipation versus confirmation, not getting in too early, not getting in too heavy. And the difference is like, I saw the price pattern clear as day. I didn't add to it because I was already deeply into the trade and I just want to get out. Those lessons, and that's a decade ago, man. It's like, I have tightened up my risk management and a lot. I owe a lot of that just cleaning up my trade and track record for trading options, because that trade, rather than be an upside down Swiss yen, if I traded that as an option trade, it'd be defined risk from the very beginning. I wouldn't have to sit on a 20% drawdown. I would sit on a 0.25% risk and I'd be blown out of the position, losing exactly what I said I was going to lose up front. And you can take losses responsibly that way. It's just a lot cleaner way to trade. You don't get yourself into a lot of trouble that way.
Perfect. Also, Bulent in the audience says, Nick, it's worth mentioning that Pulver Alerts comes with the full practical options video course, has everything. Yeah. Again, guys, if you're serious about this stuff and you want to learn, come trade with us. I mean, Chris has been doing this longer than I have, but we show our portfolios all the time. Chris has got his pulled up. I've got mine pulled up. I don't know how to be more transparent and real about this stuff. Chris is the guy to learn from if you want to learn options, being practical, being realistic about this stuff. We're here every day. We're going to shut down the stream here in just a second, but if you're interested in joining us, if you want some information, best way to do so is we've got some wonderful support staff here behind the scenes that'll help you get a membership set up. If you want Pulver Alerts, if you want access to the trades that I'm sharing, all of that is available. Click right here, send a direct message. Maybe James, if you could throw up the QR code on the top of the screen for the chat with us also. Again, send us a direct message. let us know you're interested in joining us. We'd love to meet some of you, have you in the group, and see if we can trade the markets with you. It'd be great. Chris, that's all from me. Thanks very much for coming on, hosting for a little bit, and
Sure.
for keeping an eye on markets with me.
Okay, man. I'll see you tomorrow morning
All right. Sounds
for the
good.
news that's not going to come.
Yeah, for the news that won't show up, we'll be there. That's our dedication level, guys. Thanks
That's
very
right.
much for watching. Have a great rest of your day, everyone, and we'll see you tomorrow. How would you like to win a free copy of the Edge Finder? Well, this month we are giving away not 1, not 2, but 3 free copies of the Edge Finder to 3 lucky winners. That means if you join, there's a 3 times chance that you are going to be the winner of a free copy of the Edge Finder, which is usually a $1,400 product. With the tools offered by Edge Finder, you can track institutional positioning through the commitment of traders data or the put to call ratio to study what crowd sentiment is currently like on your favorite charts and assets. Or if you're interested in tracking macroeconomic data and how it could potentially impact things like gold, silver, commodities, currencies, and indices, check out our US economic heat map. This table allows you to see all of the major economic readings that things like the Federal Reserve are watching to set monetary policy, and these things drive trends dramatically. Or check out our economic surprise meter, which shows which currencies are stronger than others based on the economic data being released. And you can tie it all up with the top setups page that we offer within the Edge Finder, which scans all of this data and generates bullish and bearish readings for your favorite symbols. So now that you know how awesome the Edge Finder is and that we're giving some away for free, how do you join? Step 1 is to join our Telegram channel. We'll drop a link down below, or if you scan the QR code that you see on your screen right now, that'll take you over to the Telegram channel. That's step 1, pretty easy. Step 2 is to make sure you enter the giveaway using the form being shared in the Telegram channel. Simply fill out this form, takes about 1 minute, and your name is in the hat for a chance to win. And there is no step 3. Step 3 is, I guess, simply just wait to see if you're the winner. There's no harm in joining, so best of luck to you, and remember, 3 people will be winning, so make sure to throw your name in for a chance to win. Just to recap, step 1, join the Telegram. Step 2, drop your name in the form that can be found in the Telegram, and you're good to go. Now let's get back to trading.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams, and as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.